If you could only dollar cost average into a single investment for the rest of your life, what would you choose? Now, I've invested in a ton of companies over the last 12 years, and for the past 2 of those years, I've even worked as a private equity analyst, and I'm studying for the CFA Level II exam. So I've seen basically every investment under the sun, and even with all the financial knowledge that I've gained out of all this, the only investment I would make would be into VT. But of course, nothing's ever that simple. So in today's video, I'm going to be breaking down my portfolio as a financial analyst. This is the current bird's eye view for my portfolio. It's sitting at $221,382.74. And you'll notice that a majority of this in blue right now is just in cash at 60.8%. or $134,710.02. Now, this isn't just a cash pile that's sitting underneath my couch right now. This is mostly invested into SGOV, which is a short-term treasury ETF that's earning me about 3.5% a year. And you're probably asking, why do you have so much money just piled up in cash, only earning you 3.5% a year, when you could just go and invest it into VT and earn 8 to 10% annually? And the reason why I've decided to put this huge cash pile down is because I'm trying to buy a house in the next couple of years. I'm going to put down $250,000 as my down payment for that house, and I need this to be stable. I can't have this money just at the whim of our president who could make the stock market crash 30% in a single week. So I've decided to take all the cash that I'm going to invest into buying a home and just keep it in SGOV right now. And my second biggest investment is in stocks at $70,000. And a majority of this right now is in individual stocks, which I am moving away from. I have about $40,000 into individual stocks. And then the rest of my portfolio is going to be in this ETF breakdown that I'm going to give you. Keep in mind, I have about 7 different brokerage accounts that all of my stocks and ETFs are broken down into. So this is only going to show a snapshot of that. But this is my ETF breakdown where I am investing 26% into small cap stocks through IJF, because the added risk that you're taking on from investing in smaller companies should pay you a premium. My second biggest investment is in the Vanguard XUS ETF. A lot of investors will just simply take the advice of investing into the S&P 500. But I think that there is a lot of risk just investing into the US. With all the political turmoil that we've had between our last couple of presidents, I don't think it's going to get any better anytime soon. And of course, the US does have dominance because of our treasuries that we're able to sell to the rest of the world and because of the US military. But I don't think that the amazing returns that we've seen really over the last 20 years is always going to go into the future. So I have decided to invest into XUS with 24% of my portfolio in VEU. My next biggest investment is in mid-cap stocks, which I believe this one is IJJ. And this is specifically focused on value stocks. And just like with small cap stocks, there is a little bit of premium that you can gain from investing in value versus investing in growth. And you don't have the extreme risk that comes with investing in growth, where the cash flow can kind of be all over the place. So you're taking on less risk to get more reward. So that's why 20% of my portfolio right now is in IJJ. Now, my next biggest investment is into the S&P 500 through IVV, where I have 20% of my ETF portfolio invested into the S&P 500. I do think that there is some chance that we will continue to see our big hitters really making up for a majority of the profits in the US. If you look at the Pareto rule, it shows that 80% of the outcome comes from 20% of the sources. So it could be the case that the S&P 500 continues to outperform. So that's why I still have 20% of my investments into the S&P 500. And the smallest percentage of my portfolio right now is in VOO, which is an emerging markets ETF. So emerging markets is just underdeveloped nations that are coming into fruition. They're finally hitting their stride, like China is one of the biggest investments for this ETF. They were a manufacturing hub for like the last 40 years, basically. We got all of our stuff from them. And now, because they built that base and they made all that money, they can improve their lifestyles, and ultimately that's going to improve profitability for the companies that are operating within China. So this is my ETF portfolio. Again, this is 26% into small caps through IJS, 24% into XUS through VEU. I have 20% of my money into mid caps through IJJ, 20% into IVV, which is the S&P 500, and then 10% into emerging markets through VOO. And the rest of my portfolio really right now is in individual stocks, which I kind of preach against because it's really hard to predict which companies will actually perform well, especially if you're looking over the long term. But I've tried to find companies that I see increasing their cash flow at a really rapid rate. So the first one that I've invested in has been Qualcomm. And I really like Qualcomm just because of how diversified they are compared to a lot of the other semiconductor makers. I currently have 32 shares of this, and this is worth $5,100. The next one is Gen Digital, a cybersecurity company. I have 172 shares worth $4,490. Next investment is in Tenable, which is another cybersecurity company, a much smaller firm. I have 200 shares of this worth $4,400, and this one's currently down 33%. But on paper, I really thought that this company was the perfect match because they're growing their cash flow at 30% annually for the past 5 years. So the price action on the stock really doesn't match up with the cash flows and the growth that they're experiencing recently. And that goes to show you that you can make the perfect investment into a single company and it can still lose you money. My next investment is into Himax, which is another semiconductor name, much smaller firm. I have $4,600 in this. I have 13 shares of Thermo Fisher worth $8,200. I have 166 shares of VT worth $24,000 right now. I have 47 shares of Illumina, currently worth $6,600. And then the rest of this is my wife's portfolio, where she has almost 5 shares of the S&P 500 through SPY, worth $3,400. She has almost 3 shares of Meta, worth $1,800. She has 12 shares of Target, worth almost $1,400. The NASDAQ, the literal NASDAQ, not the QQQ, but the actual exchange, she has 12 shares of, worth $1,216. She has 25 shares almost of Snapchat, currently worth $185. And then my smallest investment is one that I made probably about 5 years ago at this point, 20 shares of MAPS, which is a special pharmaceutical company, currently worth almost $17. And the last portion of my portfolio is in cryptocurrency, where I have 8% of this, or currently $17,510 into different crypto. This consists mostly of Bitcoin right now, almost $11,000 just into Bitcoin itself. And then I did invest heavily into Dogecoin probably about a few years back whenever Elon Musk kind of first started hyping it. And then I sold, I think, half of my position right before he went on to SNL. But my current position is currently worth $3,300. And then I have $3,200 worth of Ethereum. So you can see that I'm pretty well diversified through my portfolio. I have semiconductors, I have cybersecurity companies, I have medical device companies through Thermo Fisher, and then I have all the ETFs that I've invested in as well. And whenever it comes to investing in the stock market, just like Warren Buffett always says, the only free lunch in the market is diversification. And the reason for this is because of what's called right tail skewness, or whenever you choose hundreds of stocks, you're more likely to come across a really big winner than if you invested into just 10 companies. So it's better to diversify your portfolio, especially through ETFs, because then you don't have to put in all the work that a financial analyst like me has to make before he actually puts an investment down. Invest that time into building skills and things that you actually enjoy and your passions, you'll make more income, so you'll have more money to invest. But that's my portfolio breakdown as a financial analyst. Hopefully you found some of this useful. If you did, leave a like on the video, and I'll see you tomorrow.